All right, ladies and gentlemen, we are beginning with the third session of the day titled Bridging the Gap, How FinTechs Are Democratizing Access to Credit. Please allow me to welcome on stage our esteemed panelists with a huge round of applause. Dr. Innocent Matshe, Deputy Governor, Reserve Bank of Zimbabwe. Welcome, sir. May I please welcome on stage Mr. Sanjay Tugnait, President and CEO of Fairfax Digital, a Fairfax company. Can we also put our hands together for Mr. Ashwini Kumar Tewari, Managing Director, Corporate Banking and Subsidiaries, State Bank of India. Please allow me to welcome Mr. Yash Desai, Co-founder, ZET. And this session is going to be moderated by Ms. Neetu Chitkara, Managing Director and Partner, BCG. A very warm welcome to all of our incredible panelists. And now I hand over the further proceedings of this session to our moderator, Ms. Neetu. Over to you.
Thanks so much. We realize we are one of those rare panels which is actually running before time compared to the GFF standard time. So we'll probably give it a minute before we get started just to give a chance to the rest of the people to come in. And I do say that at the end, given we are going to start on time, hopefully we will have time for at least one or two audience questions. So in case people have something in their mind, you can also use the time to think about. Just to recap everybody, the topic that we're going to discuss is bridging the gap, how fintechs are democratizing access to credit. As you can see, we have a full lineup. We have right from the regulator to bankers, incumbents, we have fintechs, and then we have a lot of global perspectives. So Sanjay from Fairfax, we have Dr. Innocent from Zimbabwe. So it's going to be quite a world tour as we get started. Yeah. Just one request, by the way, if everyone can just put their phones on silent. Yeah. And we are bang on 1:10, so I'll get us started so that we can also, move the panel on time. Just for everyone's context, right? When we talk about this bridging the gap, how fintechs are democratizing access to credit. Even as we set up this panel, I did want to start with three stats. Three stats just for everyone to get us grounded, right? And I've taken the liberty, instead of hunting for new stats, we did release a report yesterday with the FM, the inaugural report, which talked about convergence, the human AI frontier from BCG. And there were three things from that I wanted to pick to be able to contextualize this discussion. First, fintech is a very important wave. So what's the data that we talk about there? And as a consultant, I'm bound to always, bring in data wherever we start with, which is when we look at global fintech revenues, this is likely to be projected to be $1.5 trillion by 2030. And not just that, Asia Pacific is actually expected to overtake North America as the largest fintech market by 2030. And India obviously being a very, very important part over there. So first part, to say fintech is important. It is very, very relevant as we think about the world today. And that's where my second stats comes in. For those of you who were there yesterday, this is something that the finance minister also spoke about, that it is already updating the access to credit and the entire financialization of the economy. So the stat there is 50% even today, world's real-time payments happen already in India. For all of us who are using UPI on a day-to-day basis, I'm sure it is intuitive that yes, a lot of that happens, but to say 50% of the world's real-time payments today happen in India, right? And the third stat is also talking about AI. No discussion today is complete without talking about AI and the impact that it's bringing. And the stat I want to talk about here is $1.3 trillion. This is the investments that AI has seen in the last 5 years. This is actually 4 times the investments in FinTech. So already, if FinTech is a wave, AI is already a super wave that we are starting to see. And it again will have a huge impact as we think about the world going forward. And maybe just before now I start the Q&A with the panelists, what would this really mean? Okay, all the numbers are fine, in isolation. What would this mean at the real person's level, at the last mile? And I just want to think of you, or want you to visualize the story of, let's say, one person, right? And this is also what we speak about in the report. We talk about Savita. She's a tailor in, a tier 2, tier 3 town. Today, everything is working in an informal sort of setup. But tomorrow, AI can actually create personalized insights for her if she chooses to. Again, consent is a very important, consent, security, these are very important as you look about AI. But if she chooses to have that app and to be able to have this type of insights, it can tell her that, okay, you are spending so much on medical expenses, you are actually eligible for, let's say, Ayushman Bharat or these type of schemes. So these are government schemes that you are eligible for. She's getting a lot of fraud SMSs, or, which is a huge problem, as many of us realize. The AI can actually alert her that this is not a message you should be clicking on. Similarly, it can tell her about her business and what are the things she can do more in her business, which is very, very personalized to her. And in that sense, the access to credit can truly move forward as we think about the future. Again, some of this will play out, and we have a lot of very, very experienced people on the panel, so I'll probably get their perspectives on some of this as well. We'll cover 3 areas. One is first just understanding, because our topic is about bridging the gap. The first is about understanding the gap itself, then talking about how fintechs as well as incumbents are actually addressing this gap today. And the third part is about saying, as we look at addressing this gap, what are the areas that policy or innovation can be done to be able to make this even faster? So I'm going to start right up front when I talk about understanding the credit gap itself, and maybe we'll start from you, Dr. Innocent. You obviously join us from Zimbabwe, but it's a larger emerging market perspective also that we want to understand. What are the root causes of the gap itself? Like, what causes barrier to affordable credit or accessibility of credit, as you have seen?
So thank you very much, Moderator, and thank you and good afternoon, ladies and gentlemen. The way I understand it, there are several factors that lead to the gap and its widening. The first, I think, is data and the form in which this data is being perceived, analyzed, and harnessed for use in assessing and accessing credit. The second is really just information asymmetry that we face on a daily basis. You know something, but you think it is known to everyone and all the economic agents out there. And unfortunately, this is not the case. So data asymmetry is a big issue. Then we have the cost and nature of risk. As we all know, risk keeps changing, and the nature of that risk needs to be known to the financial authorities or even the institutions that deal with these economic agents. So it is critically important for that to be pretty clear for regulators especially, and for the institutions themselves. And then, of course, being a regulator, I always want to think that policy plays a role. For the longest of time, we have seen that policymakers have taken time to A, understand, and B, to be able to enable the harnessing of the data that, or the information that they have in order to enable economic players to provide credit to consumers. Then lastly, consumer behavior, or at least the understanding of consumer behavior from institutions that provide this credit. Then there is a desperate need for consumers themselves to understand what credit offers for them. It's not, indebtedness can be a vehicle for empowerment. On the other hand, indebtedness can be also very risky. And there is need for these economic agents to be able to assess the type of risk that they incur, and therefore how they can lessen the burden that enables them to grow and thrive. So let me leave it there. I hope I haven't said too much.
No, very helpful, Dr. Matshe, and particularly the part that you said also about the widening gap. I think that's also useful to understand, and some of the elements on consumer behavior. I'll maybe move to Mr. Ashwini now. And sir, obviously leading as part of country's largest bank, you are there, across all over the country. How have you seen, or what has been SBI's approach to, accessing some of these gaps, let's say in the retail and MSME world, particularly with, what we call the digital-first ecosystem that's emerging now?
Thank you, Neetu, and thank you, GFF. But before I get into that, your stats reminded me of the Economist podcast, Money Talks, where at the end of it, there are always some stats which are laid out. So I'll give you two stats for the gap first. One is that the India's credit to GDP is still around 55% compared to all leading developed markets, which are more than 100%. So that's one indicator of the credit gap. Second indicator is that the MSME gap, which is, there's a report in 2022, which estimated this to be around 40 lakh crores, which is a very large amount. And of course, this has been updated to be a little less since then. But still, both of these stats indicate a very, very large gap. So with that, let me first lay out the SBI's own experience in this area. As you rightly observed, we are not only the largest bank, but we bank the largest number of customers at 520 million customers. So therefore, we have all customers right from the bottom of the pyramid, the so-called Pradhan Mantri Jan Dhan accounts, right to the biggest corporates in the country. In terms of usage of technology, especially AI and machine learning, in our case, what we have done is there are 3 or 4 approaches we have had. On the credit side, we have used machine learning for now almost 5 years to develop end-to-end digital models, which use the transactional data for customers which already bank with us. We also use their digital footprints, the GST data if they are GST enabled, and the bureau data, of course, and use them to create a on-the-go, already pre-approved line of credit, which they can avail in 4 clicks. So these are various variants of it. One is on our retail side called digital personal loan. Then we have the business loans, small value business loans. So this has been going on for the last 5 years, and we have had a very large book. And we have been tweaking this model to, especially on the business side, so that the credit costs are contained. We have had some fluctuations initially, but it has worked well. However, these are our existing customers, and we look at their data and pre-approve them rather than actually asking them to fill up forms and all. What has changed in the last 2 years, or rather 1.5 years, is the fact that we've come out with a business rule engine model focused on MSMEs. This is since January last year, and we have built up a very large book, almost 80,000 crores sanctioned. And in this case, this is a model where the sanction does get done in just less than a minute, actually. And these could be new to bank bank customers, not necessarily your existing customers. Of course, we have built in an element of physical check on the shop or the factory if they have. And after that, the documentation is also digital. So it's pretty smooth, and it's up till 5 crores so far. And of course, we intend to take it up to 50 crores in the next phase, which is going to happen in the next 1 year. And by this, we'll be covering almost 95% of the MSME segment which is available. For bigger tickets, the traditional models will still work because we need more assessment and detailed financial statement analysis. So that's on one side. The second part is on the risk side, where we are using machine learning and analytics increasingly. And this is backed by a very strong team of analytics, data scientists, and engineers, and other such people, almost 60, 70 people, which have been in place for the last 5 years, who have developed models for assessing risk. So for example, they look at the transaction data from branches and classify some branches as high risk, potential where we have more deviations through the machine learning method. And then that calls for a higher audit scrutiny and maybe an instant audit sometimes to look at if there are any deviations which are leading to frauds. The third model, which has just been launched in a CUG space, is about an early warning system. Now, we always had an early warning system, but it was a lot of false positives. So therefore, it was very difficult for the operating people to look at each and examine each and then come out with mostly there's no result of it. So what we have done is integrated the entire space, transaction data, bureau data, digital footprint, GST data, news data, all of that together to create a single score in the early warning signal, and that score is red. Then necessarily a separate committee will look at that account and decide whether there's some decision has to be taken on this. So this is going to be formally launched, but it's already in the CUG, so most of our officers are using it. And of course, the last thing is that we use AI intensely in our staff, because staff needs knowledge and support on the go. So there is a chatbot which gives them, they can ask a question and AI uses it to look at all the instructions of the bank and comes out with an answer, and it improves over time. Contact center also, a lot of AI is being built in so that the learning from whatever questions are being asked, better answers could be prepared. So a lot of areas we're working on, but the operative word remains, how do we bridge the credit gap, which is there in the financially excluded people and also in the maybe MSME and other spaces. And our view is that while we will do what we can through machine learning, AI, and other technologies, including digital documentation, but we feel that fintechs and NBFCs and MFIs are very, very strong partners here because they have the last mile reach, which possibly we will find it hard to build on in all areas. And we will work with them in a co-lending model or a portfolio purchase model. We are already doing this, but I think that model can substantively improve so that this can scale up at a much larger scale than what it has done so far. I'll stop here and we'll take it further.
I'm sure that's a lot of good news to the fintechs in the room, because there is, as you rightly said, even with all the AI, etc., that you're doing, because it's such a large country, there are many gaps, etc., that will remain. And so there is a lot of room for people to innovate. And in that context, I'd like to bring you in, Sanjay. You started at NPCI in India, but you've then been in Toronto at Fairfax and then many other countries. What has been your experience on, for the fintechs who are in the room, who are building, what sort of principles they should see or observe to actually create solutions which are futuristic, but also addressing some of these credit gaps?
First of all, thank you, Neetu, for the question, and great to be on this panel with some of the esteemed members. I also want to thank GFF. I also want to thank NPCI, which is a very great partner, and the team out there of the CEO, Dilip, Ritesh, and Kishan. So thank you for being absolutely great partners with Fairfax. Fairfax Financial, for some of you who may not know us, we are headquartered out of Canada. Our founder, chairman and CEO, Prem Vatsa, is called the Warren Buffett of Canada, and a lot of you may have heard his name. We are a top insurance company in the world in P&C, but we also are an investment company, and we have a lot of investments in India. So some of the key ones are GoDigit is one of our investment company, Bangalore Airport, CSB Bank, and we have Amit Madan here, Thomas Cook. So these are some household names, which we leverage and have. But also globally, we have invested across the world, and one of the key markets is the Hellenic region, where we own. We are the largest shareholder in Eurobank, which is the largest bank in Greece and Cyprus, Bulgaria and Luxembourg and London. So that's just kind of a background out there. To your question, Neetu, I like to think about what would Savita in your report would want the fintechs to deliver on. And I think going with Savita as the S, I think there are 3 S's which I would like to add, which Savita would like. One is speed, sahuliyat, and safety. So speed, sahuliyat, and safety is what Savita would want from the fintechs. And let me give you an example, because 2009, I was involved when I was the MD of with Accenture in India, with NPCI architecting. During that time, Nandan sir, Dr. Dilip Hota, Dilip Asbe had just joined as a CTO. We were there. So we were the people who architected, and nobody realized what would UPI be today. And I think 2020 was the turning point where there were about 2 billion transactions in a year happening. Now, COVID was the catalyst, but what NPCI UPI offered was exactly the 3 S's: speed, sahuliyat, and security. And basically, till 2024, we had close to 16 billion transactions a month. And I think if you take a page out from that history book, that's what the fintechs need to do. And I think the digital real-time rails was something which NPCI has laid as the infrastructure. I think the next wave, which will accelerate this growth, and this is where when I met Prime Minister Modi ji when he was in Cyprus, the Hellenic region or the Greeks gave us democracy. And I told Prime Minister Modi ji that you gave us digital democracy. So we got the democracy from Greeks, but now we are taking and giving the digital democracy to the world. And he smiled. And I truly believe that India, with 50% of the digital payments happening out here, but we need to get access into capital. And if you look at today, top 10 companies in America have 40% of S&P market capitalization. Top 10 companies have 40% of market capitalization. This is never happened. This is only because of leveraging the agentic AI and the AI boom. So you have access to capital, and now we need to leverage and get agentic AI, and the second wave will be tokenization. Because if you look at in India, where land itself is the largest asset for people, if you can tokenize the land bank and give credit against that, secure credit, right? That is something which will accelerate what COVID helped us do. So I think we are at the cusp of it. I know we have partnership with SBI. Thomas Cook is working on agentic AI. Eurobank, which is in Greece, we are working along with a company called Voicing AI, which is a Silicon-based company, but has its based in Bangalore, on agentic AI and also on tokenization, including art, because a lot of art is available. So tokenization of art and land, that will unlock the value. So as I mentioned, is what would Savita want is speed, sahuliyat, security, and digital democracy in action is the mantra.
Very helpful. I'm actually going to ask Yash at this point, because I'm sure the fintechs in the room are like, yeah, I can build all of this, but how do I get customers? Like, as a very practical question, right? That how do I get customers to trust me as a first-time fintech and so on? And you've done this as part of Z. Do you want to share your own experiences that even as you build the solution, and particularly if you're talking about democratizing access to credit, you're talking about going to people who may not even have any bank or won't have any bank accounts, they don't have any footprint. So many times people face a challenge. So how do you get people, and financial services is a business about trust. So how do you get people to trust you as a fintech?
So firstly, I wanted to say thank you to everybody who's here. Thank you to the panel that I'm with. Neetu, coming to your question, the way I'd like to address it is that, like you said, that trust is the most important factor when it comes to selling financial services. While we are a fintech, our roots actually started as a distributor of credit cards and loans. And we actually built an entire network of agents that would explain credit products to people in tier 2, tier 3, ideally in the income group of 30 to 40,000 rupees a month. The ideal customer for us is actually Savita itself. So Savita is getting a lot of mentions today. And that's the customer that we want to solve for. Because that sector truly, once they understand the product, and they are the ones that actually need the product as well. So we started off as an agent network that sold credit products. We recently launched a secured credit card with an FD amount of as low as 5,000 rupees, which allows these customers to build their credit score. So Savita would have access to 5,000 rupees, and Savita would be okay to make an FD. And the minute she starts using that, that allows her over a period of time to build her credit score. And the first things that we did actually in the credit score as well is that the credit report itself can be super intimidating. I know that the first time I saw my own credit report, there are a lot of unanswered questions in how do I sort of decipher it. So we've actually built, using AI, we've built a video format that explains the entire credit report to you in 2 minutes. And that is something that really works with these consumers. The idea is that once they now have a secured credit card and build their credit score, they will now get access to unsecured credit from the larger banks, the NBFC. We have an NBFC of our own where we will give access to these people. So I think that's how we're sort of helping build trust.
You're giving me a lot of hope for Savita. There are a lot of things which are getting built. I'm going to maybe come back to you, Dr. Matshe, at this point, because as a regulator, now you see a lot of people in the room, let's say, building solutions for, and everyone with the right intent. But at the same time, as a regulator, what you might face as challenges is how do you differentiate between innovation which can help versus things which may have challenges with respect to either financial stability or especially when we are talking about AI, about data privacy, about guardrails. How do you balance, and I'm sure as a regulator you get asked this a lot, how do you balance the innovation and some of these risks?
Let me be honest, it's not easy. But I like to always remind people about the experience of M-Pesa in Kenya. One of the good things that regulators there did was to make sure that you give space. You maintain an up-to-date policy framework, but let experimentation happen. So I would therefore summarize it as light touch regulation. Meaning that if you've got a framework that is too tight, you stifle the growth of the sector, you also stifle creativity within the sector. In terms of regulation itself, it has to be proportionate to the activity in your market. I also believe that risk-based regulation is best. The only challenge there is you can only regulate something that you know. What you don't know is very difficult. So be conscious that there may be knowledge gaps on your side as well as a regulator. So be open, interact with the market as much as is possible, particularly with fintechs, because they are at the forefront. And we've seen here in India, how much creativity has propelled and has helped generate a lot more revenue for government, not for government's sake, but for society's sake. Let me hasten to add that the enabling environment itself includes all these new technologies, AI, risk, analysis, and so on. But I want to share something that we've done in Zimbabwe. we introduced a collateral registry. And I'm not sure whether you've got something like this, but I suspect it's embedded in some of the elements that's within the platforms you have already. Basically, it is a way in which you use movable assets. So you can use movable assets to collateralize financing within the small and individual production sectors. That way, you do not take that sewing machine that the guy is using as unacceptable collateral. You can collateralize that. You can also enable ways in which you can expand the digital space. I think my fellow panelists talked about tokenization. We've experimented with that. We know how it works, and it worked wonderfully well for two aspects, basically liquidity management and on the risk side. So, or on the collateral side. So you can use these innovative ways, but still keep your policy frameworks intact. So I am basically advocating for an open-minded policy framework that gives space for creativity and innovation.
Very helpful. And on that one, I'm going to get first you, Mr. Tewari, and then Yash to speak about one from the incumbent's perspective and then from the fintech's perspective. How do you get this collaboration going? I think you had pointed out earlier when we were speaking that it's not about competition anymore. That much is, I think, quite well known. But how do you get the co-creation happen?
Yeah, thank you, Neetu. You changed the question from competition to collaboration. And actually, this is something we have seen in the last 2-3 years, that there is an intense collaboration between fintechs and financial services companies, including banks. We ourselves use a lot of fintechs in our various journeys. For example, our video KYC is handled by one fintech. Our scraping of the transaction statements and the availability of the income tax statements, downloading of those are all handled by fintechs. So there are multiple other use cases. So as a large bank, what we have done is we have had a policy for some time to impanel fintechs, because the challenge when we deal with fintechs are threefold. One is the challenge of cybersecurity, whether the code which has been written is up to speed in terms of protecting the customer data, and also in terms of whether any malware, etc., can come in easily. That's one challenge. The second challenge we face is the scale. That fintechs may have a solution which may work on 1,000 customers or maybe at 1 million transactions, but our kind of areas where we have like billions of transactions almost on a daily basis, how do we handle, will the fintech solution be able to handle that kind of scale? And third is, what is the strength, bench strength, which means if there is some key person who leaves, then do they have adequate strength to actually continue the solution and maintaining the solution? These are the challenges. So what we do is we have a proper framework where we assess the fintech, and we also guide them that, okay, this is how your cybersecurity can be improved. We have a ISD department, Information Security Department, who guide them to actually standardize themselves, get those certifications which are needed, enhance the team if required. And also, once we actually onboard them after doing all the due diligence, that's the time actually we continue to support them if required, and this is something we are contemplating, that should we take some minor stake as well so that this can continue further. But we have had very good experience in this regard. On question of tokenization agentic AI, let me say that we are also looking at agentic AI, especially in a very closely, so that we want to actually have our credit memos done by AI in a very seamless manner, but not exposing the data to the public cloud or where they are hosted. So we're looking at our own internal private cloud, where we could host a thing like a Llama or a Copilot or any other, basis some NVIDIA GPUs, and create a platform where this agentic AI can work on our credit memo. So that's something work in progress.
Just to add on to that, what Ashwini mentioned, we could, again, I like the word collaboration, but there was another word called cooperation, right, which was created. So it's not just competition and cooperation, it's cooperation. And we would love to collaborate with you because we are doing a lot of work in Eurobank and with Thomas Cook in the agentic AI phase, which is behind our, inside the firewall. So a lot of security with agentic AI, and we've done that. So just offering that to you, and this is how we can, access, borders, across borders.
Collaboration in the
offering
panel itself, I
is
like
not
that.
is not a
I like
usual
that.
So
thing.
Neetu is doing
Yeah.
her magic, yeah? Thank you so much.
I'm more than happy to take some cut from there, but maybe I'm also conscious of time. So maybe Yash, we go to you, and then, Sanjay.
On that note, sir, I'm also going to pitch to you after this meeting. So by next GFF SBI can launch a card with us also. So, no, but like you said, that it's actually no more competition. Like fintechs actually take guidance from the bank or like regulators like RBI and NPCI to help us decide. While we want to be aggressive and push for growth, to also have enough guardrails. I think my personal experience has been, we also learnt it only after falling. Started the company 5 years ago, went through one of those challenges early on. Before that, I always looked at security as a hindrance. But in our space, it's absolutely necessary because of the number of people that it can impact. And I do believe that it's come a long way in the last 5 years. I remember my first pitch to banks back then, when only 2 banks actually had a video KYC process altogether, versus today where everybody is completely digital and like there's so much possibility and openness towards collaborating. So yeah, that's about it.
Fantastic. In the interest of time, I'm going to maybe take one last question before we move to the audience and take one question there. Again, while AI is ever present, I think the other thing on people's mind is geopolitics. And in today's world, of course, there's a lot of innovation that India has done. Is there a way, Sanjay, you've seen across various countries, how do you take it to other places across the world?
Absolutely. And I think Prime Minister Modi ji is the best brand ambassador for us for taking India global. So a couple of years ago, and I'm just narrating a story here, which I will bring to this relevant point. I think there are 3 trends or 3 forces which we are seeing in the world. One is democratization. The second is deglobalization and decarbonization. Okay, and let me explain that to you. A couple of years ago, Modi ji was in France. He was invited for the Bastille Day, July 14th. And he actually went to the Eiffel Tower and he said that as Indians, we could now use UPI, NPCI and our cards to actually buy an Eiffel Tower ticket. How powerful is that? I was sitting there and I was watching that and I said, if we can do this in France, we have Eurobank, why cannot we partner with NPCI UPI? And next time you go to Santorini or Mykonos, you should be able to use and leverage NPCI UPI through Eurobank. And so that's the project. I picked up the phone, called up Dilip, and I said, why don't we export? And who can tariff that? How do you take that and tariff it? You can't. So we are now working on a project with NPCI UPI, with Kishan and Ritesh and in the room here. And we are now going to launch in Q1, starting with remittances of Indians out there, leveraging in using NPCI UPI rail. So as I mentioned, I think leveraging the fact that what we have been able to do in India and be 50% of the digital payments, and given everybody wants to do Make in America, Make in India, Make in China, the whole deglobalization, decarbonization and democratization of what we have created in India can be exported. And we are already talking about when Modi ji was in Cyprus, we said we'll launch the next UPI, NPCI after Greece in Cyprus. And I've actually flown in from Sri Lanka where we have invested in the largest equivalent to a Tata Group, a company called John Keels. I was with the chairman. And they also have a bank and they have retail and hotels and all of that. And I was just talking to Kishan out here, though there is Lanka Pay and we've got, but can we now leverage and expand in Sri Lanka? So we can actually take what we have created. And what this does to the fintechs is they follow, because then the infrastructure is laid and then you can actually drag on the coattails and build that entire ecosystem globally. And that is something which will really help us take India and make it global. So Decarbonization,
yeah,
deglobalization, and decarbonization.
So bridge the
Thank
credit
you.
gap, not just in
Absolutely.
India, but also
Globally.
globally.
Thank
We
you.
did promise some audience questions, so maybe we'll take one question before we close. Any gentleman in the front?
So, with the credit dispensation comes the default issue and collection issue. So, are there any fintechs or what is specifically you are doing in that collection space? Because that is something which will definitely happen later on. That will be required later on. Yeah,
I'll take that. We've actually explored this route because while we're helping people to build their credit score who are new to credit, we're also looking at people who are delinquent and how they can come back into the credit fold. One of the features there that we've explored is to build build a collection mechanism where we tie up with banks directly, and like physical agencies used to do. We do that on the app, and we're actually using UPI for that EMI collection and settling with the bank for their loans from the past. Say, for example, if they had a 1 lakh rupee loan, defaulted on the last 5 EMIs. Now it's been 3 years, their score has gone to 500. Now if they want to settle it, and the bank is, say, let's say HDFC Bank, and if they want to settle it with HDFC Bank, we'll do that and we'll facilitate that via the app. That is something that we are working very actively on.
thank you.
So I'll just make one point. Of course, collection remains an issue, no doubt about it. Digital loans and fintech loans, small value, the cost of collection is too high. But having said this, I think there are two things. You would have taken those questions, but I would just add that creating a KYC layer across, like it has been done for the mutual fund and the securities industries, is absolutely essential, because each entity doing their own KYC, while that's mandated by law, is creating a lot of friction, a lot of difficulties. And secondly, the DPDP Act, which is going to come in, the consent architecture, again, this has to be centrally handled. It has to be a layer like the Aadhaar or someone, which cause it will standardize, it will reduce cost, and it will be used by everybody. Those two, I think, will really push up the bringing of people who are not in this and bridge the credit gap. Thank you.
Fantastic. I think that's all the time that we have. Thank you so much to the wonderful panel. And thank you for the audience for your interaction throughout.
Thank you so much to our panel. Can I please request all of you to come in front of the stage for a group photo? Ladies and gentlemen, a huge round of applause, please, for our very esteemed panel. Thank you for sharing your valuable insights with all of us. It has been such an honor to have you grace us right here at Global FinTech Fest 2025. Thank you. Let me take this opportunity to thank our gracious sponsors, our gold partners, Mondrian Corporation India, Unimoney Financial Services, Metropolitan Stock Exchange, DevRev, and JP Morgan. Our next session for the day is Beyond Wallets and Screens, Designing Future Consumer Experience. I request all of our guests who would like to attend to please be seated, as we are about to begin in a few more minutes.